Hello, all our attendees to our webinar. Can you all hear me? If you can all just let me know in the chat box, please. Thank you all for coming too.
Hello, everyone. Hope you can hear me too. Can you hear me, Jim? You can?
Yes, I can hear you, Tony.
All right.
If people can just let us know in the chat box.
Yeah. Oh, good. Leanne can hear you. Yes.
Yeah.
Okay. Just as you're logging on, just jump to the poll question and answer a very quick.
Yes, we would be keen to know who of you came to our first webinar and how many newbies we have, which would be good. We'll just wait for a few more people.
Can everyone see the poll question that we've put up? Did you attend our JobKeeper 1.0 webinar? If you can just jump on and answer that, that would be handy. Publish.
There you go. Can everyone see that now?
Good.
Yep. Fantastic.
Oh, 100%. Here we go. Good.
Oh, there we go. Going up and down.
We'll start soon. We'll give everyone a few minutes to jump on. You can see the numbers are climbing. Hope everyone's well. And
yeah.
Any of you who are over 30 years of age would probably appreciate the tribute to Copper Art, a franchise from the 80s. We get 80s or 90s, probably 90s actually. I did have a Copper Art franchisee many years ago. It looks like the Copper Art. Oh, it's in reverse. I've just realised it shows 2 instead of 10.
Okay. All right. Well, look, it is 10 o'clock, so we might get going. Now, I'm just going to end the poll now. And Tony, the results, 76% of our attendees came to our first webinar, so thank you for returning, everybody. And we've got 23% who are new. So on that note, so obviously we are all here today because, as you know, the JobKeeper ends at the end of September, and then we go on to the new JobKeeper 2.0 with its different rules and requirements. So on that note, I think I'll hand over to you, Tony, and you can start enlightening everybody. Thanks.
Thanks. All right. So hopefully everyone can see a screen that I've just shared there, which at the end of this webinar, we will send this out, subject to a little bit of correction of formatting, I've just noticed. And what I'm just going to explain is over here we have the original JobKeeper. We'll just do a quick recap. We'll talk about what the new JobKeeper means and what you've got to do. But there's also a little quirk that happened for employees that came along that you employed as at the 1st of July that affects the last 4 fortnights of the current JobKeeper 1. So we're going to talk about that as well. So just a quick recap. So JobKeeper 1, as you know, runs out on the 27th of September. JobKeeper 2, and already we called it, I think the webinar's called 2, it should have been called 2.1, because no sooner did the government release the rules on JobKeeper 2, they tweaked it slightly. So when they announced JobKeeper 2, my initial reaction was hardly anyone was going to get it because they actually made the criteria a lot harder to get JobKeeper 2, but then Victoria went into meltdown, and so they actually then changed it. So I'll call it 2.1, where they've actually made it easier, and there's going to be more and more people who will actually continue. Now, there's 2 phases. So phase 1 runs from the 28th of September to the 3rd of January, so essentially October, November, December, and then phase 2 is going to run from January through until March, January, February, March. Now, this part over here where you had the declining turnover that you needed, that has not changed. So for most people where your turnover is going to be less than $1 billion, you still need to meet the 30% drop in turnover. So that has not changed for this JobKeeper 2.1 at all, okay? So what also has not changed, and I've got a question mark on it because there was a little bit of noise that they made about the turnover basis. Now, what was really confusing in the first one was that they talked about your GST supplies in the Act, and that wasn't 100% clear what that meant. Now, GST supplies doesn't really line up with what the BASs are. you could actually make a GST supply and then raise an invoice later. And so there's a lot of headaches around it. The ATO came along and simplified things and said, look, we'll just take the numbers that are on your BAS. Then people started thinking, well, we might manipulate those numbers and chop and change. So what they're expecting is it's whatever's more likely to reflect your business activity. So if you're lodging your BASs on an accrual basis, the ATO expectation is that you'll calculate your decline in turnover on that same basis. Now, you can change over if you wanted to, but you just got to have a really good reason. That has not changed so far. I put a question mark on there because there was some noise that they were going to tighten that up. Nothing's been announced as of today. Now, the comparable periods, this is where it got a little bit interesting. Under JobKeeper 1, you had a lot more options. You could, if you remember, you only had a drop in turnover, and I'll just keep referring to the 30%. You only needed a drop in turnover of more than 30% in 1 month, and that was it. Then you qualified for the whole period, the first 13 weeks. That was it. You didn't have to retest. Once you were in, you were in. They actually gave you a couple of other alternatives as well, which you could have compared the June 2020 quarter to the June 2019 quarter. I'm not aware of a single client who did that, and also comparing the September quarter as well. Most people just compared months. And what they also did is they came up with about another further 6 or 8 alternate tests. Where it gets interesting in JobKeeper 2 is initially they had made it quite hard. I'm not even going to go through what they initially announced. The rules are at the moment you have to compare. You will compare your actual September 2020 quarter with your actual September 2019 quarter. Okay, so we're not there yet. And the interesting thing about it is JobKeeper 1 finishes on the 27th of September. So you have to be pretty quick and pretty accurate in that first week of October to try and work out whether your actual turnover has dropped by more than 30%. If you qualify for this, if you have that more than 30% drop, you will get JobKeeper Phase 1. As I said, for that period, October, November, December. You then have to retest for Phase 2, which is you then have to see whether your turnover has dropped, comparing your actual December 2020 turnover with your actual December 2019 quarter. And as you can see there, Phase 1 finishes on the 3rd of January, so very, very early in the new year. You'll need to work out what your actual turnover is. Now, assuming that you meet all of this criteria, as you know, the contentious issue at the moment has been that the JobKeeper fortnightly payment has been $1,500 per employee per JobKeeper fortnight. That's created a few interesting anomalies, as people have realised that people who only work 1 day per week and have been a long-term casual, they needed to get topped up to the full $1,500. And also some anecdotal stories that I've heard from clients that sick leave has skyrocketed in the past few months as well. So what the government has done is in Phase 1, they've actually dropped it from $1,500 to $1,200 per fortnight. And they're also testing whether you're actually working greater than 20 hours per week or less than 20 hours per week. And we'll talk about that in a moment, a little bit further down. But if you're someone who works an average of more than 20 hours per week, you'll get $1,200. If you're less than 20 hours per week, it'll be $750. So this is going to address this anomaly where people are getting the full $1,500 for only working a few hours a week. That's Phase 1. Phase 2, it starts to drop again. So you can see the Liberal government at work here. They want people to be plugged into the system. They want people to get up, eat your cornflakes, fill your car up with petrol, and go to work, be plugged into the system. They don't want people sitting at home earning $1,500 a week. They actually want people. So they've reduced it to. There's a great saying that I enjoy, that people's behaviour doesn't change unless there's enough financial incentive or disincentive to change. So this is clearly trying to get people back to work. And as I said, yeah, less than 20 hours. Now, do we want to take a little break for some questions now, Jen? Is there anything?
Sorry, I just put my audio on.
Already?
No, look, there's no questions. I've just been monitoring that. Not at the minute. Although Nick has mentioned, just to make sure we cover the JobKeeper and the cash flow boost is not in G1 total sales on the activity statement, but whether you're going to cover that now or later.
I will cover that now. So coming back to this, what Nick from
Sorry, and just quickly before I mute, if anyone's got any questions, please just type them through. You don't have to wait till a certain time in the break, because I'm monitoring that. And if something comes up, I'll certainly make sure to ask Tony for you. Thank you.
Yeah, no trouble. Thanks, Jen. So what Nick's mentioning too, just to reinforce that when you're calculating that decline in turnover, you do not include the cash flow boost, and you do not include the amounts you've received for JobKeeper in your calculation. So it's not just a matter of running off a report and comparing this quarter to last quarter. You actually have to, and we've been exporting it out to Excel and just deleting the rows that have JobKeeper and cash flow boost and interest received. Anything else that's not actual turnover, and that's what you actually compare. So that's a good point to make, because if you include those, chances are you won't meet the 30%.
And Tony, Taryn's got a question too. Will the more or less 20 hours per week be calculated based on the previous 12 months?
I'm coming to that in a minute. So hold that thought. I'm coming. That's down here. So now we're into this bottom part of the spreadsheet, and these are the parts that have changed a little bit. All right. So I'll address that question in a moment. So just to reinforce that the key dates, there's been a new key date that's introduced, but the key date for employers has not changed. You had to be, you had to have an ABN, you had to be in business, you're not allowed to be a bank. That hasn't changed. So any new business that may have started in the last couple of months will not be part of this. You had to have all those key dates for employers dated back to the 1st of March, and that will run all the way through for the full 12 months now of JobKeeper, all the way through. The alternate tests, again, we're not sure. As I mentioned earlier, there could be some new tests, or there could be the similar alternate tests for turnover. So if you haven't had a decline of more than 30% in this first period, there were, as I mentioned, 6 alternate tests. Some that had an increase in turnover. We'll have to watch this space, because I haven't actually mentioned anything about that yet at all. Now, key dates for employees, as you would be aware, was the 1st of March. So it was employees that you had as at the 1st of March. Now, for those existing employees, nothing has changed. If they haven't resigned, if you haven't terminated them, they will be entitled to JobKeeper all the way through until the very end. Remember, if you stand them down and re-employ them, then they will be entitled to JobKeeper. Fair Work, you might remember, there were some Fair Work rules that were amended that allows employers to stand employees down if it's a COVID-related decision. All right. Now,
Tony, sorry, and Chris has, at what point do new employees become eligible for JobKeeper?
This is where I'm just jumping in right now. So new employees that you employed after the 2nd of March 2020, and they were employed as at the 1st of July, they actually now jump in for fortnight 10 to fortnight 13 for JobKeeper 1. This is where it's going to get a little bit confusing, all right? So just let's recap. All of your employee tests as at the 1st of March, they had to be a permanent part-time, or a long-term casual. A long-term casual was someone who was employed on a regular and systematic basis over the 12 months before that key date, before the 1st of March. They had to be over 16 or 17 and financially independent. Now, remember, there was a couple of weeks there with 16 and 17-year-olds were actually paid. But now, if you're 16 and 17, you have to be financially independent. If you're at school or full-time study, you won't get it. You have to be an Australian resident, or you have to have this subclass 444 visa, and also you were supposed to not be excluded and be on paid parental leave or on workers' comp leave, and you also had to fill in the nomination form on time. All of those tests you retest again, but now as at the 1st of July. So if you've put on anyone in this period here after the 1st of March, they may actually qualify for JobKeeper 1.0. All right. So what this means is more employees are going to be eligible. Okay. Now, just looking at some examples that I've given here, A permanent employee starts on the 5th of April. Now, during this period here, this first one, they were not eligible, but they will be eligible here. A casual employee, say, start on the 1st of May. They've only worked 10 months up to the 1st of March. They were not eligible for JobKeeper 1.0, but they will be now, all right, because they've been regular and systematic for more than 12 months. You could have had someone who got their 444 visa on the 15th of June. They were not eligible as at that date. They will be here. Or you have semi-skilled student who turned 18 on the 29th of May, not eligible here. Well, was eligible then, wasn't, but now they are going to be eligible here. So the challenge for you all is you need to have a look at all of your employees that were not with you on the 1st of March, that joined before the 1st of July, and retest as to whether they meet all of these conditions, all right? And if they do, the trick is that they actually started from fortnight 10. Now, fortnight 10's ended, all right? So when they announced this at the beginning of August, it was all a mad cluster that, well, and again, under the legislation actually says you have to top up their payments before the end of the fortnight. Now, the tax officers actually said, they actually passed the legislation on Friday, the 14th of August at 5 p.m. So it was all, impossible to get everyone in by the 16th. So what they've announced is that you can do your top-ups if you have anyone who's earned less than the 1,500 back here, 1,500 per fortnight. If they've earned less than that and all of these new criteria apply, you can top them up before the 31st of August, by Monday. So the nomination forms as well, there's a little quirk as well, they technically have to be back by the 24th of August. So be careful with the dating that employees put in. So I might take a breath for questions on that, because I'm sure that's going to create a...
Just, anyone's got any questions, please just add them. Otherwise, if everyone's fine.
What was Chris's question, Jen?
It was at what point do new employees become eligible for JobKeeper?
Yep. Okay. So is everyone hopefully clear on that? So you retest for all your newbie employees on the 1st of July, and also test for maybe for employees that you had on the 1st of March, then all of a sudden they become eligible.
And Chris has also got a question about new employees after 1st of July.
No,
yep.
They do not apply. JobKeeper does not apply to them. All right, so just coming over
we can move on.
Here now. So we had a question earlier about, just on this side, about the average hours of greater or less than 20 hours per week. Now, this is where it gets a little bit confusing as well. So remember, this is a continuation of people who are going to work, who are going to apply for JobKeeper during this phase. So for employees that were employed as at the 1st of March, the average hours that you're looking at are the 4 weeks that pay before the 1st of March. So you need to look at how many hours they worked in February. And for new employees that were on as at the 1st of July, you need to look at how many hours they worked in the month of June, the 4 pay periods in the month of June. Now, the ATO had mentioned that there is some guidance coming for this, because I'm sure there's going to be some edge cases. How on earth are you going to, it's not black and white as to whether someone is over or under. And that is going to be a real problem area of when you go to claim JobKeeper. Now you're just putting in the number of employees and your turnover. When you get to this phase 1, you're going to have to now split your employees between those two categories so that you're claiming the correct amount of money per employee. The other interesting one is to do with this acronym EBPs, which is eligible business participants. So they are your sole traders or your partnerships where you've nominated one partner, or your family trust that run a business and you've nominated one beneficiary in that structure to be the eligible business participant. Well, how are you going to work out, how are they going to determine if they work at 20 hours or more? There's no payroll records. Do you put your hand on your heart and say, I definitely work more than 20 hours in my business? And this is going to create some interesting issues, especially with sole traders who, say, have a casual or a part-time job somewhere else. how they're going to argue that they work more than 20 hours in their business as well as working the number of hours that they worked in another business. So again, hopefully some guidance is coming on that in the next few weeks, because it's not that far away. The other interesting one is the legislation actually says that you're eligible to get JobKeeper as long as you have it nominated with another employer. Now, what you could have is a situation where you had an employee who worked for company A as at the 1st of March, got JobKeeper, resigned, started working for company B in, say, from the 1st of June. They qualify for JobKeeper in company B. But the way the legislation is written is that they actually can't get JobKeeper because if they've nominated with another employer. Now, the whole reason it was written, it was to avoid a double dip so that they don't get JobKeeper at 2 different places. And there's actually no mechanism at the moment to actually revoke the previous nomination. So the ATO have said that if the previous business has either closed down or has ceased, they're okay with the employee renominating with the second employer.
And I just had a comment from Taryn just in your previous comment before, Tony, just that interesting about the payments, because the employee was stood down in June, that would affect the payment level they will be at.
Sorry, what does that mean?
About the hours and the payment levels?
Yeah, correct. Yeah, if something happened, correct. If something happened in the month of June, yeah, and they were working permanent, then they dropped to casual or permanent part-time, yeah. So that's the sort of guidance that we're waiting on from the ATO. I'm hoping that they might, I think someone asked the question earlier, if they look at the previous 12 months, they've just said the previous 4 pay periods. So they're not really averaging it out over a long period of time, and I think there's going to be some edge cases. This is another thing that we will send out to you as well. There's a new nomination form, so don't use the old ones. You need to use these new ones. So these are for your 1st July employees. So we'll send those out as well. So just a couple more things. I keep pressing the wrong button. I'll get the hang of it by the end of this. All right, so down here, to do ASAP. This is on your to-do list. So you need to assess whether you have any new employees that will qualify for JobKeeper as at the 1st of July. You'll need to determine their status as to whether they're permanent part-time or a long-term casual. You'll need to get those nomination forms out to those who qualify, collect them back, make sure you date them correctly. Interesting little side issue on these nomination forms. From what I'm reading online and even anecdotal evidence within our own office, when the ATO have been checking up on people whether they've been claiming JobKeeper correctly, I haven't heard of any stories where they've actually asked to see the nomination forms. All they've asked is, did you hand them out? Did you get them back? Yes. Okay, and then they move on to the next criteria. But still, you want to make sure that they're there correctly. This is your big one. Make sure you top up the pays in respect of fortnight 10 and fortnight 11 before Monday, before the 31st of August. And then after, you're going to enjoy this, you're going to have to reapply for JobKeeper phase 1 and then also reapply for JobKeeper phase 2. So these up here, they will not be automatic. All right, so they're certainly making it more and more difficult for everyone to get JobKeeper 2. So I was going to actually do something. How did we do that? I was going to do this, to share this screen. Yeah, that's it. That was the vision. So this is us, and this is how far down the rabbit hole you need to go to get JobKeeper 2.1. So they haven't made it easy, but they've certainly made it a lot easier than what they initially announced. When they initially announced that you had to have a drop in turnover in the June quarter and the September quarter, and then if you did that, then to get the December one, you had to have a drop in turnover as in the December quarter as well. So it was an and to get the extension, but at least it made it a little bit easier because of we have something to thank. the Victoria.
Tony, do we know when the application's open?
No. No, you mean for this part here? No, I'm not sure.
Correct, yeah.
I haven't heard yet, so it's going to be another one of those watch these spaces.
Has anyone else got any other questions? Anything they would like answered? As we said, Tony, we will be sending out this spreadsheet that he's working off that nicely summarises everything that you need to know and what you need to do. And we have got one more here from Taryn, Tony. Can I clarify, if anyone who is employed before 1st of July is now entitled under JobKeeper 1 or only JobKeeper 2?
Both. So this is the section here. So someone who was employed, if you put someone on the 5th of June, you can now include them in JobKeeper 1, but only from fortnights 10 to 13. Okay, so they will actually be entitled, and that's the $1,500 per fortnight. So they've allowed more people to jump in, as long as you've got to retest them. So as at the 1st of July, were they permanent? Were they long-term casuals? Were they over 18? Australian residents? Blah blah blah. So you jump through all this criteria. You'll actually be able to add them on from fortnight 10. And then if you qualify, they'll probably get JobKeeper 2 if the turnover of the business is more than 30% down September 20 versus September 2019. There's a lot of hoops to jump through.
And Tony, can you please just confirm for existing employees from the 1st of March 2020 that the relevant reference period for working out the average weekly hours can be February or June, whichever works out higher?
Well, they haven't said yet. All they've said at the moment is just look at the 4 weeks before their key date, and the key date is 1st of March, which means for those guys it's February. So as I said before, hopefully in the next few weeks some guidance is coming. I think that's too restrictive. I think they need to make it, an average of at least 6 months before they started, something like that. Go back and work out, something that's a bit more indicative and reflective of their working pattern. But at the moment, that's all it says. And look, at the end of the day, we're dealing with governments and the ATO. If they pass legislation at 5, it seems like they just hit a button and then just run out of the office. You get that impression. They actually released it 5 p.m. on the Friday for fortnight 10 that closed on the Sunday. I mean, it's just totally unrealistic to expect people to. And in fact, they did that back in March. You might remember they actually released the first round of the JobKeeper rules at 5 p.m. on the Thursday before Easter, right? So guidance is coming. Who knows? They might. I'm assuming they might release the guidance on about the 27th of September, 5 p.m. As soon as we know, we'll. And what I've done in the past is I'll send out some newsletters so everyone's kept up to date with that.
Okay, wonderful. Thank you, Tony. And finally, Chris Kelly just had the question, you were going to discuss the cash flow boost. He just needs a little bit more information. Just to explain that to him, please.
Yeah, Chris, the context of that was to do with the calculation of your turnover, that if you receive the cash flow boost and it's actually sitting in your P&L for the September quarter, you exclude it. So you don't take that into account for your turnover calculation when you're comparing your turnover for the September 2020 quarter to the September 29 quarter. You exclude the cash flow boost and you exclude anything you've received for JobKeeper. So you just get straight raw turnover.
Okay, and we've got a few more coming in now. So Pepper has asked, if we don't qualify for September, October, etc., but will again in, say, December or January, can we get JobKeeper for those months?
Absolutely, yeah. Under JobKeeper 2.0, you could not. You had to qualify. It was the June 2020 quarter and the September 2020 quarter and the December 2020 quarter. When Victoria went into meltdown, they changed that so they stand alone. So you could miss out for this quarter, then you could jump back in again. That's why down here I've got that you'll have to reapply for those, because you could have a situation where someone got JobKeeper 1, they won't get JobKeeper 2.1, this first phase, but they will get phase 2. So yes, you test you're testing each of those as standalone. And there are actually some who may have missed out on JobKeeper 1 totally, but they can jump in for JobKeeper 2 if they've got employees as at the 1st of July. They can actually get this last fortnight and even these last two if they meet that criteria.
Okay, and Anthony Cincotta has said, we have an employee who is part-time and he was eligible for JobKeeper 1, but then in May started another part-time job with another company. They're still part-time here. Do they qualify for JobKeeper 2?
Where you've got a situation where an employee has got two part-time jobs, they choose which employer to get their JobKeeper from. So in that example, if both employers qualified and both employers handed that employee a form and said, here, nominate, that employee would have to choose one and decline the other. And the one that they decline, they have to say, no, I'm declining because I'm registered with JobKeeper with someone else.
And we have one that's not actually about JobKeeper, but a quick one from Jason Stephen, who says, will there be any further cash flow boost from the government?
Not that I've heard, Jason, no. No, so the cash flow boost, you might recall, is, and I like the cash flow boost. I like the concept of it. It's based on paying, wages in Australia. It doesn't apply for overseas workers or for contractors. So if you've got, if you're paying wages and you're deducting tax out of their wages, they gave you a cash flow boost based on the tax withheld W2, minimum of 10,000, maximum of 50,000 before 30 June, and then again after 30 June. So I haven't heard of anything that they're extending. I think they're just going to stick with JobKeeper from here on in.
And Anthony's just re-querying his question about the employee part-time working for two employers. He's just said, but their total pay between the two companies exceeds 1,500 or the 1,200.
That part's the irrelevant. It's a consequence. That employee needs to choose which of the two employers they run with, and when they put that nomination form in, that employer then has to top that employee up with 1,500 under JobKeeper 1 and then 1,200 under JobKeeper 2 again if they meet the 20 hours. So I think I'm following what you're saying now. So that if they work part-time for both under 20 hours, chances are they'll be in this bottom section here. I think that's what you're alluding to. I was just going to mention too, one of our clients asked a question about service trusts as well when it came to the turnover calculation and also payroll companies. And I think it's one of these happy accidents that has just occurred. So what you have is you have say company A that pays money into a service trust that employs all the staff. When JobKeeper first came out, they came out with some rules to say when it comes to those service entities, you had to be part of a GST group. If you weren't, they looked at each entity separately. They just put their blinkers on and looked at each entity separately to work out whether there was a more than 30% drop. What's happened with the cash flow boost and JobKeeper is that once that's come into the service trust does not need as much money over from the mothership, so they're not actually asking for as much service fee to cover all of the wages, which then means by definition that the turnover is actually going to be down when you compare the quarters. Again, I don't think that's an avoidance issue. It's just, to me, it's a happy accident that's occurred. You're not manipulating things. So I've been at great pains in the previous webinar, even this one, and via emails, verbally to clients and staff, don't change your pattern of behaviour. Just stick to what you're doing. I think with the service trust scenario, one of the things they may look at is if the service trust has a written agreement with I'll call it the mothership. If there is a written agreement and there's a certain amount that has to be paid, you have to pay it. You can't manipulate it. But in the absence of an agreement where money is just coming across to cover the wages, I don't anticipate a problem. But again, just click on this part down here. Hopefully, fingers crossed, some guidance is coming, because at the moment there's nothing.
Okay, thank you, Tony. Chris still has questions on the cash flow boost. Not sure if you wanted to answer them here, or maybe we can give him a call after the webinar. It's up to you. He just wanted to know if it had to be actively applied for.
The cash flow boost is something that you received when you lodge your business activity statement or your instalment activity statement. So if you qualified, and again, the ATO have all that data, because again, it had separate criteria, but it had a key date of, I think, the 12th of March. You had to have an ABN by that date, and you had to have staff. So no, it's something that they would supposedly automatically calculate and apply against your BAS. I'm hearing some interesting stories where it hasn't been applied, and accountants, bookkeepers, and clients have had to ring the tax office and find out why, and then escalate their inquiries. They did put a lot of work around fraudulent claims. So the sort of thing that they were looking for is taxpayers who were registering for PAYG withholding after the announcement was made, and then next thing you know, employing husband, the wife, the kids, the cat, the dog, deducting tax. One interesting one I heard was, I'm just going to pay all my family $20,000 for the year, deduct $5,000 in tax. When they lodge their tax return, they'll get a refund of $5,000, but they'll also get the cash flow boost. The ATO were well and truly on top of all of that. So it's not as easy. It's not something you apply for. They calculate it. In our case, it just came through automatically, only because, again, a business that's been around for a while, they know that they know there's a regular lodgement pattern of BASs and IASs. So we haven't. I don't think we've had a single please explain on a cash flow boost, and I'm not sure whether we've had any edge cases where we've had to jump on and ask the ATO why they haven't processed it. But I do know of a lot of accountants and bookkeepers are having a lot of problems with getting the ATO to process the cash flow boost. We even had one the other day that had $10,000 sitting as a credit on their integrated client account. The accountant hadn't told them to pay the full amount of the BAS, and so they did. And then the cash flow boost came in, and it's just been sitting there for a while. So better in the client's pocket than sitting on the ATO.
Okay. Thank you very much, Tony, and thank you to all our participants for coming. Welcome to our new ones, and also welcome back to our previous JobKeeper 1 attendees. We will be sending out a link it'll be on YouTube for the link if anybody wants to replay certain aspects of the webinar. We do realise that the first webinar that we did didn't allow you to fast forward or pause or rewind. So we have rectified that, and the link will now be through YouTube, and then you can watch your favourite bits at your leisure. So that email will come out in about 3 hours. If anybody does have any further questions, please get in contact with Tony or your accountant, whoever looks after your work here. And we will also send out the notes that Tony was using for the webinar. So thank you very much, everyone, for coming. Any final notes, Tony?
No, all I was going to say was, look, these sort of things, you try and cover about 90-95% of the general questions. There's always going to be some edge questions, and so those ones we'll probably have to sit down and focus on and have a closer look at, especially questions around, part-time employees that have a couple of different jobs, and especially there's been a lot of chopping and changing, employees that were stood down, re-employed, they worked somewhere else, people who had sole trader businesses who shrunk and then went back to work. So there's a lot of interesting edge cases. We just have to handle those one by one.
All right. Well, thank you.
All right,
thanks, everyone. Thanks for your lovely comments, and we'll speak to you all next webinar. We'll see what else they bring out.
Take care. Thanks, everyone.
Thanks very much. Bye.